Florida condo prices drop in 92% of markets. Single-family prices fall in 66% of markets. Punta Gorda condos down 11.4% year-over-year. Cape Coral single-family homes down 5.3%. Miami condos decline 3.4%. Tampa drops 7.9%. Net migration collapses from 314,000 in 2022 to 64,000 in 2024. Hurricane Ian causes $112.9 billion in damage, third costliest U.S. hurricane on record. Home insurance premiums jump 45% from 2017 to 2022. HOA special assessments spike after Surfside. The leak. Florida's own data shows the supply-demand equilibrium shattered across 5 simultaneous pressure points. This isn't a correction. It's a structural shift. Florida home prices surge 51% from March 2020 to June 2022. National prices rise 41% over the same period. The gap tells the story. The state adds 1.8 million net residents between April 2020 and July 2024. Builders complete 760,000 new homes, an 8% increase in housing stock. Florida accounts for 12% of national construction permits despite holding just 6.8% of U.S. population. Median home price peaks at $423,000 in April 2024. That's up 61% from pandemic onset. St. Augustine House bought for $195,000 in 2018 sells for $345,000 in 2023, a 77% gain in under 5 years. White-collar workers liberate from office desks. Baby boomers cruise into retirement. Snowbirds flood in. Venture capitalists set up shop. Crypto speculators chase the tax advantage. The Sun Belt development machine cranks to maximum capacity. Texas and Florida home building activity matches or exceeds subprime era construction days. The heady times just before the 2008 collapse. But even the most ambitious builders can't keep pace. Transplants arrive faster than permits get issued. Investors stack cash offers. Vacation home buyers scoop up beach condos as second properties. The frenzy builds through 2021, accelerates through 2022, peaks in spring 2024. Then the reversal begins. Not overnight, not with a crash, just a slow recognition that the party's ending. Buyers start pulling back. Sellers don't adjust fast enough. Inventory begins building. The stage sets for what comes next. Florida lures millions with beaches, balmy weather, no state income tax. The pitch works. 4 major metros, Tampa, Miami, Orlando, Fort Lauderdale, rank among the top 10 areas with the steepest drop-off in net domestic migration from 2023 to 2024. The reversal happens fast. Young people flock to Florida through late 2023. White-collar remote workers chase easy living. Anyone sick of COVID restrictions relocates. The vacation feel becomes permanent residence. Initial buyers get historically low interest rates, sometimes 2%, sometimes 3%. When you're offered a loan that's cheap, you can't turn it down. It influences a mass jump into the housing market. City slickers flee shoebox apartments and cramped homes sitting on million-dollar lots. Florida looks like a bargain by comparison. Northeast Florida becomes a real bargain destination for transplants. But here's the kicker. 20-year residents and lifelong Floridians watch the numbers climb beyond reach. The competitive frenzy peaks. 20 people making offers the same week. All cash deals become standard. No contingencies. No inspections. Sellers name their price. Buyers pay it or lose out. Then fresh arrivals sour on paradise. Too hot. Too expensive. Not home. Even a vacation gets old when it's permanent. When housing supply hits just as buyer demand wanes, the stage sets for price drops. That's just Econ 101. Supply and demand. Florida gets both sides wrong at once. The transplants who drove prices up start looking elsewhere. Tennessee, Georgia, the Carolinas. Places offering the cheaper living that Florida once promised. The wave that built the boom reverses. Not everyone leaves, but enough pullback that the math changes. Demand drops. Supply keeps rising. Prices have nowhere to go but down. U.S. median annual home insurance premium jumps 33% over 3 years. Florida homeowners get hit harder. Average Florida insurance cost climbs 45% from 2017 to 2022. Rising replacement costs fuel the surge. Home prices and construction costs soared during the boom. Increased hurricane risks and insurance payouts compound the pressure. Multiple home insurers abandon Florida entirely. They just exit the market. No explanation, no alternative, just gone. Hurricane Ian strikes September 2022. $112.9 billion in total damage. Third costliest U.S. hurricane on record. Markets like Cape Coral and Punta Gorda take direct hits. Thousands of damaged homes require renovations. The combination of increased housing supply for sale, those damaged homes, coupled with strained demand creates a perfect storm. Result of spiked home prices, spiked mortgage rates, higher insurance premiums, higher HOAs. Translates into market softening across much of southwest Florida. Back-to-back hurricanes tear through the western coast late in the year. Premiums skyrocket beyond any reasonable level. The insurance quagmire deepens. Companies that stayed in Florida start restricting coverage. Age of your roof matters now. Whether a company will even insure your property can change the entire dynamic of a transaction. Then there's Surfside. June 2021. Condo collapse kills 98 people. Florida passes new structural safety rules. More inspections required. Additional funds for repairs must be set aside by end of 2024. HOAs issue sky-high special assessments to cover costs. Monthly fee increases stack on top. Greater impact hits older coastal Florida condo buildings. Homeowner associations weren't prepared for the recovery and insurance issues. Coastal condo properties lag the most in southwest Florida recovery. The factors don't line up to help them recover faster. Slow recovery predicted for the condo market. Insurance rates keep climbing. The crisis feeds itself. Higher premiums drive some owners to sell. More inventory hits the market. Prices drop. That attracts fewer buyers because everyone sees prices falling. The spiral continues. Interest rates return to 7% to 8% after pandemic lows of 2% to 3%. Florida home prices remain over 50% higher than 2020 levels even with the 4% April decline. That's the largest year-over-year percentage drop since October 2011. Financially, it doesn't make sense for many buyers anymore. People only buy if they really need to, not because it's a good deal like the pandemic era. Affordability continues as the #1 issue impeding sales growth across Florida. Insurance premiums stack on top. Property taxes climb. HOA fees surge post-Surfside compliance. Steep insurance outlays plus HOA fees make it difficult for aging condo unit owners to offload properties. Everything costs more now. Groceries, food, clothing. The state income tax advantage erodes under cumulative cost pressure. Real estate agents in Naples report buyers are leery of the total cost stack. Higher mortgage rates, steep sticker prices, insurance premiums, property taxes, HOA fees. All of it adds up to monthly payments that make 0 sense compared to renting or staying put. No rush among buyers with more homes sitting on the market and prices dropping from last year. Sellers get caught in a mentality, I can put whatever price I want on my home, and someone will buy it. Reality hits hard. Oh crap, people aren't buying. People aren't even looking. The psychology shifts fast once the data becomes undeniable. Builders in Florida and Texas need more help than buyers in most other places. They drop prices. They lend a hand on closing costs. They chip in thousands of dollars to help buyers get lower mortgage rates. All of it just to keep sales moving. Even then, companies don't see the typical spring selling season pickup. Spring 2024 fails to deliver. The slowdown deepens through summer. Here's where it gets wild. A house that would have required 25% down and full asking price in 2022 now sits on the market for months. Builders offer rate buydowns. Sellers cover closing costs. Buyers still walk away. The math broke somewhere between peak prices and current rates. Nobody wants to catch a falling knife. Condo sales dropped 20% in April in Hillsborough County, down 21% in Miami-Dade County, down 15.5% for Southwest Florida, down 27% in Panama City area. The real pain begins in the condo market. Pace of single-family home sales falls since February compared to a year prior. Median single-family prices drop 4% in April. Worthy of attention when you're still 50% above 2020 levels. Florida becomes one of the few housing markets where active listings exceed pre-pandemic 2019 levels. Inventory of existing homes builds up fast. Supply elasticity works different here than in in the Northeast and Midwest. Higher home building and multifamily construction. New supply enters an affordability-strained environment. Builders use bigger affordability adjustments, mortgage rate buydowns, where needed. That cools the resale market by drawing in buyers who might have purchased existing homes. Parco Labs analyzes 42 metros for supply-demand dynamics. They deliver either a bullish or bearish rating for each one, basically whether prices will rise or fall over the next year. Miami and Jacksonville get bullish ratings, but Orlando, Tampa, Lakeland, Deltona, Northport, and Cape Coral all get slapped with the bearish tag. The key factor, the number of homes sitting on the market. There's a ton of supply, a ridiculous amount of supply. Direct quote from Parco's CEO Trevor Bacon. When he says ridiculous, he means it. Double-digit drop in condo sales pace since last summer. The slowdown looks different than the 2006 housing crash, but shows similar market fluctuation patterns. Deals on the table disappear after hurricanes devastate areas. Back-to-back hurricane damage to the same geographic locations loses deals. Realtors report transactions falling apart within days of storm warnings. Skittish buyers inland pull back too. They watch coastal properties get hammered and decide waiting makes more sense than buying into uncertainty. Inventory stacks up in markets that used to clear in weeks. Homes sit for months now. Days on market climb. Sellers drop prices but not enough to move product. The standoff continues. Buyers wait for lower prices. Sellers refuse to accept the new reality. Nobody transacts. The market freezes. Hurricane Ian strikes September 2022. $112.9 billion in total damage. Third costliest U.S. hurricane on record. Markets like Cape Coral and Punta Gorda take direct hits. Thousands of damaged homes require renovations. The combination of increased housing supply for sale, those damaged homes, couples with strained demand, result of spiked home prices, spiked mortgage rates, higher insurance premiums, higher HOAs. Market softening spreads across much of southwest Florida. Back-to-back hurricanes late in the year tear through the western coast. Tampa Bay area sees a decent bump in storm-damaged home sales months after the storms. Homes needing gut jobs get sold to flippers and renovators, but not as many homes as expected actually sell. It's tough for people with storm-damaged homes. Continued sales likely, but not the rush flood to market everyone anticipated. Realtors report deals disappearing after hurricanes hit. The same geographically located homes get hit by consecutive storms and lose transactions. Buyers see the pattern and back out. Insurance companies see the pattern and exit the market. Lenders see the pattern and tighten underwriting. Everything stalls at once. The insurance nightmare deepens beyond repair for some owners. Companies abandon the state entirely. Premiums skyrocket beyond any reasonable level for those who stay. Climate risks stop being solely a coastal concern. Inland buyers start worrying too. Other markets like the Southwest and Southeast show similar softening signs. Phoenix prices turn negative year over year. Denver follows. Atlanta shows weakness. Raleigh starts declining. The Southeast and Southwest aren't as weak as Texas and Florida right now, but they could be on their way there if supply continues increasing and buyer demand stays at current levels. The trigger mechanism becomes clear. One major climate event can freeze an entire regional market within days, not weeks. The transactions and process fall apart. New buyers pull back. Sellers panic or dig in. Prices adjust or listings pile up. Florida shows the rest of the country what happens when climate risk becomes climate reality. Builders stay optimistic by nature. That's the job. But even Florida builders expect year-end prices to come in down slightly. For a builder to report negative year-over-year pricing in a survey counts as incredibly meaningful. They never admit to price drops unless absolutely forced by market conditions. Lennar president and co-CEO John Jaffe tells analysts in late March, buyers in Florida and Texas need more help than buyers in most other places around the country. Builders drop prices. They lend a hand on closing costs. They chip in thousands of dollars to help buyers get lower mortgage rates. All of it just to keep sales moving. Even then, the company doesn't see the typical pickup in nationwide sales that usually comes with the start of the spring selling season. Unlike the Northeast and Midwest with their tight supply markets, the Sun Belt has traditionally been a hotbed of home construction. that kept prices in check despite population growth. Florida home building and multifamily construction runs higher than many markets. New supply enters an affordability-strained environment. Builders use bigger affordability adjustments where needed. That draws buyers who might have purchased existing homes. It cools the resale market as a side effect. Builders and agents in Texas seem to have found an equilibrium. They're selling fewer homes each month, but they've slashed prices enough to keep things moving. The machine still operates, just at lower volume and lower margins. Florida hasn't hit that point yet. They haven't found the bottom. Home builders complete over 760,000 new homes from April 2020 to July 2024. That's nearly an 8% increase in housing stock. Only 5 states see bigger building booms on a percentage basis. And except for Texas, all of those states have far fewer residents than Florida. The activity got close to or exceeded subprime era crazy construction days. The most ambitious builders couldn't keep up with the influx of transplants, investors, and vacation home buyers. Now that supply hits the market just as demand collapses, the timing couldn't be worse for sellers, or better for patient buyers willing to wait out the correction. The policy response remains unclear. Florida legislature passes some affordability measures. The Live Local Act cuts red tape blocking affordable housing development. Building codes get strengthened to withstand climate disasters. But none of it addresses the core problem: too much supply meeting too little demand at prices nobody wants to pay. Punta Gorda leads the declines. Condos down 11.4%, single-family down 7.3%. Cape Coral follows close behind. Condos down 8.2%, single-family down 5.3%. Northport shows condos down 8.9% and single-family down 5%. Naples records condos down 7.2% and single-family down 2.7%. Tampa condos drop 7.9% while single-family slides just 1.2%. Panama City condos fall 8.4% with single-family down 1.4%. Port St. Lucie condos decline 7.3%. Sebastian shows condos down 7.7% and single-family down 1.5%. The Village's condos drop 8.4%. Deltona condos fall 6.6% with single-family down 1.3%. Florida's 3 largest metros tell different stories. Miami condos down 3.4% but single-family up 3.2%. Tampa condos down 7.9% while single-family drops 1.2%. Orlando condos down 4.7% but single-family up 0.4%. The divergence shows how localized real estate remains even in a statewide correction. Parco Labs issues bullish ratings for Miami and Jacksonville, but Orlando, Tampa, Lakeland, Deltona, Northport, and Cape Coral get bearish tags. The firm looks at supply sitting on the market and sees trouble ahead. 6 markets flagged as likely to see continued price declines over the next year. Northeast Florida sees decreases on the smaller side. Realtors say any decrease counts more as a correction than a collapse. Nothing's falling off the cliff here. Not like people don't still want to move there. Things just aren't at peak anymore. The market's getting closer to balanced. Buyers think it's a buyer's market. Sellers think it's a seller's market. They're having a hard time meeting in the middle. That's the only way you get a sale. The typical competitive situations are gone. No more 20 offers the same week. No more all-cash standard. People are doing their due diligence now. It's slowing things down, not necessarily in a bad way. The numbers aren't catastrophic. They're just edging off the peak. Southwest Florida takes the hardest hits. Hurricane damage compounds with insurance crisis compounds with affordability collapse. The coastal condo market remains the weakest link. Older buildings facing massive assessments can't find buyers at any reasonable price. Some owners just walk away. Let the HOA deal with it. That's not hyperbole. It's happening in multiple buildings across the coast. Florida prices drop roughly 3% from their spring 2024 high point. That's a small dent in headline values. Hardly even correction territory, let alone a bust. But Florida could still have a ways to fall. They haven't found the bottom yet. That's the key phrase. haven't found the bottom. The sky isn't falling, but the pandemic-era frenzy couldn't last forever. A pullback in demand was always expected given how many people bought and sold homes before rates went up in 2022. If builders hadn't delivered all that supply over the past few years, the affordability picture would be even more dire. Just look at the Midwest and Northeast. Fewer homes got built there. Supply remains tight. They may not be seeing price drops now, but buyers aren't getting any relief either. Florida's pandemic growth was unsustainable. Direct quote from Nelson Stabil, a principal and co-founder of Miami-based development firm Integra Investments. But he's still a staunch believer in the state's future. The state's at a healthy pace now. The whole country has woken up to the fact that Florida isn't just a retirement destination. It's a place where folks can raise their families, where they can have an incredible quality of life. Is it perfect? But is it better than most areas? Probably yes. Florida generally hits the wave before the rest of the country. Keith Poliakoff, a real estate attorney in Florida, makes that point clear. It's a good indicator of what's to come. Other states should learn lessons from Florida's saga. Cut red tape that gets in the way of building affordable housing like the state legislature did through the Live Local Act. Strengthen building codes to withstand climate disasters. This isn't the end. It's the setup for the next big opportunity. 6 key numbers tell the story. 92% of condo markets declining. 66% of single-family markets declining. 51% pandemic price surge from March 2020 to June 2022. $112.9 billion Hurricane Ian damage. 45% insurance increase from 2017 to 2022. Net migration collapse from 314,000 in 2022 to 64,000 in 2024. The correction plays out over quarters, not weeks. Patient buyers with cash and patience will find deals. Over-leveraged investors will lose properties. Builders will consolidate. Insurance companies will return once prices stabilize and climate risk gets properly priced in. The market will balance. It always does, just not on the timeline anyone wants.